at BubbaTrading.com, and he joins us on the line and live from Chicago. Good evening to you. Happy New Year. It's been a while since we've spoken. Todd, earnings season will be kicking off. Could this provide any sort of silver lining to the punishment that we experienced last week?
Good morning, Pauline. I think we're going to have a relief rally. I think so. That your Twitter question, my answer is yes. I think there's going to be a pretty big relief rally this week. But I don't see earnings being good enough to carry this market. I don't see earnings good enough to take us out of the doldrums we're in, because I believe we're going to be firmly in correction territory and working our way lower. However, again, I'm looking for big rallies to be a seller, which I believe we'll see a big rally this week, because now that China has taken off the circuit breakers, all that means to me is that the Chinese government is willing to buy more, which they already own 52% of the market. So they're going to let the market free trade, which will allow us to have a little bit more certainty. So you'll see, I think, some buyers step in here either tomorrow or the next day. Soon here, we're going to see a pretty good relief rally, I would think.
Okay, so you're expecting a relief rally. Where are you going to be dipping in? What sectors are you interested in?
I'm really interested in longer term, but I'm really interested in the commodity sector. I think commodities are way too beaten down here. I think that oil is probably very near a bottom. You know, one interesting fact is that the rig counts of shale oil are down at almost 1-year lows, which means they could almost create a shortage. I think based on what we call the contango formation, which means that oil is priced much more expensive a year from now at about a 20% premium, that tells me that oil is probably somewhere near. Now, we could go lower, but I'm dipping my toes in oil itself, and as well as some of the oil sector stocks like the Halliburtons of the world or the Schlumberger. And I think the commodity space, the soft goods, grains and things like that are way underpriced. We have way underdone it. And if you take that in consideration with that, the banks themselves are very short the U.S. dollar right now, which means they believe the U.S. dollar is going to fall. If the dollar falls, that will make commodity prices even more appreciated for here.
Okay, so Todd, while you're going to dip your toes in, even though oil is expected to go lower, you also say the markets are a house of cards. Right now, the S&P 500 is at 1922. What are you looking at?
Well, I think that we're going to probably see, before this is all done, I think we see in the 1500s. 1586 is my number in the S&P. However, we're not going to go straight there. I would expect to see a rally back up to about the 1960 level, followed by a sell-off down to 1900, probably 1870, and then 1850 is going to be a key spot in this market. So I can't give you, 1586 is my overall number, but I have to look at the market one level at a time, and that's what I'm seeing now. But I do think we're in a lot of trouble here, Pauline. I think that the markets are imagining the growth we've had because corporate earnings and payroll have not met. The people, the job earners, the wage earners have not caught up to the corporate profits yet, because the house of cards that we've built has been on free money, merger and acquisition, and stock buyback, not on true fundamental growth of companies where we actually see some manufacturing construction. In fact, we lost more jobs last year. We lost 3.1 million jobs over the year. And this payroll report, we lost 162,000 manufacturing jobs.
Okay, so as you're putting up all of these red flags and we're looking ahead to possibly 4 total hikes for the year, how are you going to position yourself during different parts of this year as you look at the horizon here?
Well, I'm going to be a buyer. I'm a buyer of the basic material sector. So I'm going to get long, or I'm going to start to own some commodities and some equities. But basically, I will be looking to be selling into this market as a trader. I want to be short this market at every good opportunity. As the markets will make big rallies, I mean, there's going to be, Pauline, some vicious, if I'm right, there will be some vicious rallies, because bear market rallies are always the most powerful, which happen to often trap the bulls because they think it's so good, they want to make sure that they get in. And of course, that's just a reason to sell. So I'm looking for a lot of bad earnings. I'm looking for a lot of problems coming forward, and I'm looking for actually no rate increases. I think we end up with a QE4, which would even signal to the market that there's more problems coming. So I think that the Fed is going to back away. I think they only raised to try to save credibility, which they have none at this moment.
Wow. Okay. So you're expecting to go back to QE. So that would be taking 1 step forward and then 2 steps back. Okay. We'll have to continue this. We'll have to continue this conversation another time. We're out of time, unfortunately, Todd. Great talking to you. Todd Horwitz with BubbaTrading.com.
Thank you. Happy New Year.